Hello investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Magnite. So Magnite started a really difficult year. Stock has sold off meaningfully. One of the aspects that came out from its Q3 results was that the guidance for Q4, particularly affecting CTV, isn't as strong as many investors had hoped for. So we're going to talk about that, going to talk about the overall landscape here, and then we're going to talk about its valuation. So I'm going to just jump right in. So for 2021, Magnite has been a really difficult investment to hold. Since February, the selling here has been relentless. You can see here in the graph that since the start of the year to date, it's down 26%, but really most pronounced has been anyone that's come in after February. This stock leaves investors with very poor emotions. It's been really tough for investors, this stock. One of the things I want to highlight is that the growth rate for Q4 is pointing towards 83% year over year. Now remember that Magnite's revenues, a portion of that are gross. That's because of the SpotX acquisition last year. So approximately 20% of its revenues, you have to add back the traffic acquisition costs. So with all that in mind, this figure that I put out right there for Q4 of 83% might look a little bit different from the 73% that you've seen elsewhere or even in the company's own guidance, but that's just me grossing up the revenues to make it more comparable with previous periods. So with that in mind, as you can see here, starting Q2, there was the acquisition of SpotX that really magnified that growth rate. And if you think about it, what management said is that the pro forma figure was only for 53%. So investors are kind of thinking to themselves, okay, what's really going on here? Because in Q2, the figure for the organic acquisition was for 79%. So you had Magnite growing the organic growth rate at 79%, and for Q3 it's pointing towards 26% organic. So that's a meaningful drop, okay? So that's one of the things that I want to highlight. Now, if you see here, that's a theme that's been affecting this whole ad tech, social media advertising companies, okay? So the graph here looks a bit here messy because the companies have all reported on different days of the week or whatever, but for the past month this whole advertising space is down, okay? I've put up here Digital Turbine, Roku, Pinterest, Twitter. Everything is really just kind of taking a meaningful hit right here. And it's quite interesting to note that you can say that, okay, yeah, well, Snap's issues were mostly down to the privacy changes, whereas Roku is mostly down to supply chain issues that are affecting the hardware sales. But I think that those nuances are really a bit of a distraction here. What's really affecting is that there's this kind of change in investment sentiment, because everyone had been expecting that Q2 21 was the new normal, and that now Q3 all these growth rates are kind of coming up against a heavy comparison with last year's Q3, and investors, okay, what is the actual new normal here? Is it Q2? Is it Q3? And investors are just being put into disarray. And anytime that there's a bit of disarray and uncertainty, investors lack the confidence and the consistency and predictability of their forecasts, and that investors sell off. So War bears right to make the case that as restrictions ease, all these advertising companies will come against heavy comparisons with last year. Let me just double click on that. So here you can see that Magnite's CTV revenues account for approximately 39% of its overall business. This had been the crown jewel in the investment, because the desktop revenues, people weren't that interested. The mobile side of the supply side advertising wasn't that interested. What investors really wanted to see was that safe haven CTV revenues that are able to have advertisers move as more and more advertisers have to go from linear TV to CTV, and there's this kind of overarching thesis that everything was contingent on Magnite's growth opportunity coming from CTV. As it transpires, they say, okay, yeah, so CTV for Q3 was up 50% year over year on a pro forma basis, but looking out to Q4, we're only kind of looking at approximately 23%. And then investors are left scratching their heads because this is not commensurate with what people are expecting. People are expecting for Magnite to be growing its CTV revenues meaningfully faster than 25%, because that's the guidance that they're putting out for next year for it to be growing at approximately 25%. So that's bringing all this disrepute to the company's ability to forecast. So they're saying, oh, it's only really down to travel and automotive. These are the two verticals that we've noticed that have kind of been, and they shouldn't be that broad, but investors are just like, okay, I want nothing to do with this, because if management feels that they can no longer, for whatever reason, be growing at 25% into next year, investors don't really want anything to do with the stock. I believe that this, right now, there's just so much negative sentiment facing the stock that it doesn't really matter what the fundamentals are. But at some point in time, investors will start thinking, okay, this stock is growing approximately 25%, its price is 6 times next year's revenues, and it's profitable with EBITDA margins of 35 to 40%. All in all, investors will start to reconsider this opportunity. So the bottom line is here that the big takeaway from this is that the CTV revenues have left a little bit to be desired, and investors just had such a difficult year, they haven't had any meaningful interest in holding on to this investment. So this is not a stock that I own, but if you want to find out what kind of stocks I do own, don't forget to check out my marketplace. It's called Deep Value Returns. I help you become a better investor, help you think about building your portfolio, and you can check out my 5-star reviews to see what other people have said. Okay, thank you so much for listening.